Good morning, traders, and you know what time it is? It is pip grabbing time. So what does that mean? That means we go ahead and chase after 20 pips in the market based on our setups. We're going to go ahead and look at different types of setups. We're looking for support and resistance. And we're going to go ahead and use trading tools that are going to help us be able to manage our positions and get ourselves out of those trades with a 20 pip net profit. That's our strategy. That's what we've been doing. And we've done over 130% so far this year. It's working great. In fact, we've got over 17,000 pips that have been captured already. Traders, let's go ahead and take a look what trade setups we have this morning as we jump into the trades. I'll see you right after this. All right, traders, good afternoon, good morning, good evening, and welcome to the Pip Grabber Trading Show. And yes, that is correct when I said we have made over 130%. To be actually correct in my statement, we've made actually 133% over the last year using this type of strategy. In fact, the pips we've generated is 17,150 pips that have been generated up until this point. So we've done exceptionally well. In fact, that's the results of our trade Copier. Now, if you want to go ahead and check out the results on that and check out the details of how to get connected, check out the description below. Down in the description below, you'll be able to go ahead and check out all the links on the tools we use, on the trade Copier information, the whole shebang. So check it out below. And while you're down there, do me a huge favor. Go ahead and smash the like button, because we want to get this video out to as many people as possible. Only way to do that is beat the Google algorithm. So go ahead and smash the like button, share this video, and subscribe to the channel. And if you can, go ahead and make sure that you absolutely throw a comment down below there as well, and tell us how you are doing with this trading strategy. We'd love to hear from you guys. Go ahead and throw it in the comment. Now, there's a difference between the chat that we've got right now, live chat, and of course the comment box down below the video. So go ahead and comment in the video and let us know how you're doing and how the strategy is working for you. So without further ado, traders, it is my birthday. Yes, if you want to sing that song, I'm okay with that. All right, it is my birthday today, and I thought, you know what the heck? Let's go ahead and do a show this morning. Cameron called me up this morning. He says, "Dad, it's your birthday. Should we do a show this morning?" I'm like, hell yeah, let's do it. Let's get this thing going, because everyone wants to start off with a good day, right? And so this is going to be our trades of the day as we go ahead and take a look at the setups. So let's go ahead and jump into the chart and take a look and see what's going on right here. And as you can see right here, as I go into the actual setups right here, you'll notice that we have, let's go ahead and pop it open here. All right, so here's the charts right here. And on the charts, we're going to go ahead and start off with the US Dollar Cad. Now, the reason why I'm looking at the US Dollar Cad right here, because I did get a couple of emails from some students that were in some trades on the US Dollar Cad. Said, "Big dog, you know, this was yesterday. Big dog, you know, the US Dollar Cad right now, we've got multiple positions in. Should I be concerned?" And my answer is always going to be the same. And the answer is this. If you are in the US Dollar Cad or any position and you have got multiple positions in, you should never be concerned unless you are over leveraged. That's it, plain and simple. You don't have to send me an email. "Big dog, do I need to be concerned?" Listen, the reason why we get into these trades is because we believe the market's going to do a certain thing. And we've been speaking about this for a while. And we've been talking about how we're anticipating the US dollar to sell off. And so this is not a surprise that we've seen the sell-off on the on the US dollar. And we can go ahead and take a look and see exactly what that means as we take a look at the dollar index. So let's go ahead and jump into the dollar index and start the session off by just understanding why we expect the dollar to go ahead and fall. Now, let me go to the dollar index right here, and I'm opening up the dollar index chart. And yeah, you can see we've been talking about the top of the range, and we said that the market is going to go at least down to the bottom, but we're actually chasing after this low right here around about 12,036. So it is still looking for a much further downside move. We spoke about how the market's gone ahead and tested this upside channel, and yes, sure, I get it. Some traders are thinking, man, this thing is sticking around a long time at this top right here. And sure it is, absolutely. But you know what? We're still going to trade resistance. We're still going to trade support. And we're still going to trade retracements and corrections, right? All right, well, that's the same thing, but it's just some of you like to call retracements, some of you like to call resistance or the corrections, but it is what it is. So the thing here is, if we go to the lower time frame, and you take a look at the lower time frame right here, what are we seeing here on the 15-minute, or at least on the 50-minute dollar index? We've seen that we had this big move to the downside. All right, there it is there. We had a correction move on there. Then the market dipped back down. We're right here at the 1.618. If you look at the inside swings, look at this. Inside swings, we have a wave 1, 2, 3. So what are we expecting right here? When we look at the 15-minute time, what are we looking for? We're looking for price to go ahead and correct itself, right? So we're looking for price to go ahead and correct itself. And what type of correction are we looking at? Well, it's a fourth wave correction. So if we are in a fourth wave correction, then we're looking for maybe a short pullback. All right, let's go ahead and pull this tool over here. So we're looking for a short pullback, and then we should see price dropping back down again, where it's going to go ahead and actually complete the third wave large swing, because this is my large swing right here, wave 1, wave 2, wave 3, but I got to look inside here. I see wave 2 there. Here's wave 3 here on the short swings. And so if that's going to be wave 5, that'll be my third wave based on my large wave. Then we're going to get pullback again, all right? Probably going to go ahead and take out that fourth wave right here. That'll be my large fourth wave. And then we're going to go ahead and see price moving down to our fifth wave. So we know the market's going to wave and it's going to create these different patterns. And so this is the dollar index. So let's take a look at US Dollar Cad, okay? Let's go open up US Dollar Cad right here. All right, so here's US Dollar Cad. Let's take a look and see the exact same thing, 15-minute time frame. What am I seeing here? I'm seeing a wave 1 right here. And where is wave 2? Wave 2 is situated right about here. Let's see here. Wave 2 is situated right about here. Sorry, my bad. I mean wave 3. All right? So we have wave 3. So which means that we are in a new wave structure right here. All right? So we're in a new wave structure. Now, the trade copier, if you are following the trade copier and you're looking at the signals, the trade copier has already gone ahead and bought this morning. We were selling the US dollar CAD, the US dollar CAD. We were selling, and we were selling for a few. In fact, I think we were in that position for about a week, and it held multiple positions. It went off and paid off, dropped down south, paid off, hit support here based on an extension, a 1.618 extension. And now we actually trading it long, and you think to yourself, why are we trading long? Well, because we trade support and resistance, we trade turning points in the market, and so this is why we're going ahead and trade long. We were expecting a correction move right here. Look over here, we got a nice big divergence here as well on the 15-minute time frame. Listen here, traders. If you have gone ahead and checked out the description below, there is a link there called the Pip Grabber Trading Tool. If you say, well, Big Dog, I don't want to connect to the trade copier, but I want to go ahead and do some manual trades following the type of strategy that we follow, no problemo. Go ahead and check out below. There's a link there called the Pip Grabber Trading Tool. You can get more information about the Pip Grabber Trading Tool, where you can go ahead and use it manually. So do your own technical analysis, find your own directional bias, find your own support and resistance levels, and then go ahead and trade off these support and resistance levels. Now, we've gone ahead and done that. We've gone ahead and bought off that level right here, and we're looking for a 20 pip grab. All right. Now, let me go ahead and take a look and see exactly the price we got in on that trade. All right. So we went long on the US dollar CAD, and we went long at, let's see the price. The price was at 27.75. So 27.75. I'm going to go ahead and mark that off. All right, so there it is right here. So we're about 7 pips up in this trade already. There it is there. All right. So let me zoom in a little bit. So we entered long here. All right. So we've gone long right here, looking for a 20 pip grab. And notice how it's come off and it's bounced off this 1.618. We got diversions. Now we're looking for a correction move. Now we long on this. This is the deal. If we're long on this trade right here and it doesn't work out, this is why we use a cost averaging trading approach. All right. Yes, it's my birthday, and you guys are getting a little bit extra this morning as I go ahead and talk about some more details about the strategy. So as the market goes ahead and looks to bounce back up, we're looking for price to go up to around about from the bounce here, around about this 618 bounce, maybe even test the 1.618 right here, or at least the previous low. And we're looking at approximately right here about 62 pips. Now remember, traders, we're just chasing after 20 pips out of the market, right? So if the market's got about a 64 pip opportunity going long, we shouldn't have a problem picking up 25 pips, or at least 20 pips. So the deal here is that when we're looking at, or at least when we're trading, and we're looking for a price to move into a correction move, we have to understand this is a correction move. You see, a lot of traders trade without understanding where we are inside the market space, right? We have to know which type of market cycle we're trading, where we are with inside the market cycle to understand where the support and resistance levels are. And then we also have to understand that if we are wrong, and we can be because the market needs to extend itself further or retrace more, but if we are incorrect in our first entry point, we use a cost averaging trading approach in order to be able to be wrong, but still to be able to cost average ourselves and get into the money, or even close out a break even if we really are not comfortable with that trade. We have that choice. And so right here, if I go back to the chart and I take a look over here, you'll see that we have, and I'm going to go ahead and pull it up here. You can see that we have a bounce here. And if the market does extend, this is how I look at it. I know that if the market has a very shallow pullback on the third wave, that we will have a fourth wave correction. All right? Fourth wave correction. And so if it's going to be a fourth wave correction right here, and it goes down, I should be expecting price to move to this level. Right around about here. There's the level there. So I would be expecting price to do this rally, drop back down south, go up to the fifth wave, and then bounce back again and look to take out the fourth wave high. So if I start trading long here and the market goes ahead and says, no, not interested, and we start going down, we don't capture our 20 pips going there, it'll come down, we'll get in on another entry point, but then when it comes back up to the fourth wave right here, guess what? We're going to be in the money again. We should be able to make that 20 pips going on. And so I actually, at this point right here, I have a choice. I have a choice to either go ahead and bounce this, to trade this bounce, to go for that 20 pips. And if I'm wrong, it's going to go down to the fifth wave, and it's going to put me into more entry points. But then when it bounces back and chases after that fourth wave correction move, which it does in a wave cycle, then I'm going to go ahead and make my 20 pips on that move then. So I might have to wait a little bit longer. And that's what happened with the US dollar CAD when we held that position for so long as we did. And so it does give us, so again, the reason why I feel comfortable about how I'm trading, and Cameron, if you just give me full screen there, the reason why I'm comfortable about how I'm trading is because I understand where we are inside the market cycle. And so those are the things that we need to pay attention to, traders. You see, I might be making this session into something simple, all right? Just saying, hey, guys, I'm going to buy here, I'm going to sell here, I'm going to do this, I'm going to do that. But at the end of the day, you have to understand why we're entering at these levels, and does it make sense to you? And so, we have a lot of traders that have signed up with our trade copier, but we've actually had those traders that have signed up for the trade copier also go ahead and sign up with the Pip Grabber Trading Tool. And the reason why they want the Pip Grabber Trading Tool is so that they can follow their own analysis and use their own judgment as to whether the market's at a support or resistance level, whether they're comfortable with that, and then whether they want to go ahead and enter. Now, the great thing about signing up with the trade copy is that you get trade signals. You get our trade copy signals, so you can go ahead and also sign up for the Pip Grabber Trading Tool and use our trade signals to also help you with directional bias. If you are a little bit confused and you may be not sure, you can go ahead and apply that as well. So right now, the trade copy says that we are long at 27.75. Do I want to follow the trade copy signal? I have a choice. Do I want to follow the trade copy signal? Or do I see that, okay, the trade copy signal is trading this bounce? All right, if you go back to the chart right here, we'll see that the trade copy signal is trading this bounce. Now, if I feel like I want to follow the trend and not go ahead and trade that bounce, then I would go ahead and look to sell this. Now, where's the best place to sell this move? Well, the best place is when the market comes back up here to a 382 bounce at least. Then go ahead and sell at that point, because we know that there might be a little bit of room still left for the market to retrace. We may go ahead and re-enter again. But when it turns around and heads south, there's a lot of profit to the downside. There's a lot of profit to the downside. And so we have a choice. Do we want to go ahead and sell here, or do we want to wait it out? Now, I'm going to go ahead and do this. This is what I always do. I always look and say, okay, if I sell right here, how much opportunity do we have? We've got about 37 pips to the 1.6 rate. Okay, that's fine. Okay, so we definitely will make our 20 pips right here. But what if the market pulls back against us? Let's see how far it can go against us. And again, we could be wrong and the market could take out that high and continue to move up north. But if the market does do its normal thing inside the wave structure, it will go to a 382 bounce, which means it's going to go up 25 pips. I'll be picking up a new entry there. And if it goes up any higher, it might go to that wave one low, and that's going to be 54 pips up north. That means I might be picking up a third entry point. Okay? So that means if I enter short right now, I'll be entering short again at around about 382 bounce, and I'll be entering once again at the previous wave low. So I might have to have 3 positions in. Okay, now that's not a big problem for me. I don't mind entering multiple. In fact, I can go in 20 entry points, and my equity management is going to be worked out correctly, that I don't get into a I'm nervous type of situation, right? But I'm never going to panic on my trades. But the reason why I look at this right here, it's all about the timing, right? How quickly do you want to make your profits? Because I've had a lot of questions coming from a lot of students saying, hey, what do I do about entering on trades and getting out of these trades quicker? Because I don't like holding onto these trades for much longer, or at least for long periods. And so how do you get into trades and get out of trades quicker? Well, you have to become more defined about your entry. You have to be more patient about your entry point. All right. And so looking at this and saying, well, Big Dog, I don't want to go ahead and enter, all right, where it's going to go ahead and move up against me 1 or 2 more positions, and then I have to wait this retracement out before I go ahead and make some profit. And I understand that. But the great thing about the way we do trade is that when we go ahead and enter, we don't mind it going up to the next entry point, because all it has to do now, the market just has to go back to the first entry point, and we're making a profit. So in some way, it's okay to be wrong on your first entry point. We still will make profit, all right? And so that's why I look at this, I say, I don't mind. Now, if you want to be like real detailed about your entry, then maybe you have to wait for the next pullback. Wait for the market to go up to the 382 bounce and then enter the 382 bounce. Or wait for it to go to the 618 bounce. But a slight warning right here. You might end up missing out the run. You might end up missing out on the trade, and the market moves, in the opposite direction, or at least moves in your favor without picking you up, and you might end up being frustrated about that. Okay, all right. A little bit of teaching, a little bit of explaining of the details of the strategy, so the traders that are following the trade copy understand the logic behind it. And you have to start getting to a point where you start getting comfortable with whether you're trading using the trade copier, or whether you're actually trading with the Pip Grabber Trading Tool. You've got to be comfortable. And the only way to do this, traders, trust me, I've been doing this for 25 plus years. Trust me when I tell you this. If you want to control your emotions, all right, control the way you manage your trading account. Manage your risk proper, and you will never have a problem with emotions that are based around your trades. All right, control equity management. All right, traders. I know it's not Preachy Friday, All right, but it is my birthday. Throwing out an extra extra gift there. Sorry, my throat is sore. So take it as it is. And by the way, you guys like the new merch? Huh? Looking good, right? Looking really good. Can't wait until I get my cup of coffee cup, my cup of coffee cup, or my cup of coffee, or whatever it is, inside my new mug. I'm waiting for that to happen. And so we actually have a description below if you guys are interested in getting a coffee mug. We actually have some merch below. There is a link down below. Check it out. If you guys are interested in getting a cup with the Traders Network Club, join the community. Absolutely go ahead and purchase your cup right there. All right, details. Let's go take a look at the trade opportunity. All right. So trade opportunity, US dollar CAD. At the moment right now, we're back down here at the support level. So I'm going to go ahead and stand aside on the US dollar CAD at the moment right now. I'm going to put a pin in it. I might come back to this in a moment. All right. I'm going to put a pin in this one. Let's go ahead and do New Zealand CAD. New Zealand CAD. And I'm going to go ahead and take a look at a couple of things here. Firstly, number one, New Zealand CAD is at a resistance. Well, I'm saying resistance, but at the same time, we've seen good level of divergence here. This is the 15-minute time frame. We've seen a bit of resistance confirming right here. And so as I go to the lower time, the higher time frame right here, I want to go ahead and confirm things, right? So here we go. So here we see the market is in a wave 1, 2, 3, 4, and 5. And so we're always said that price is chasing after this fourth wave right here. Okay? So we're looking for that fourth wave move. And so I'm expecting that even though we're looking for that fourth wave, we did have this big wave 1. We actually had what they call is there's a name for this. Let me see if I can think of it again. Sorry guys, it's memory is I'm starting to lose my memory a little bit. This is called a leading diagonal. There we go. Leading diagonal. It's actually leading in a first wave. So when you have a first wave and the market goes ahead and slightly moves up like this, it's called a leading diagonal, and normally happens in a first wave structure. So we go ahead and we see that inside these wave structures here, the market has created this leading diagonal. And then if I go down to the 15-minute time frame, well, let's go to the 1 hour first. I'm going to clean up some charts, clean up the charts a little bit here. And I'm going to pay attention to this wave right here. And so I noticed that we did go to the 1.618 up here. And actually, I can go ahead and move this to that high. We had a pullback here. All right, so this is the deal. Notice that we hit the 1.618 right here. Price pulled back, then rallied up again. We went past the 1.27 right here, and now we've seen a bit of indecision. So I'm going to go ahead and assume that we're going to see our 20 pip drop right here. So I'm going to go ahead and sell. So I'm expecting market to go ahead, and if this is, just so that you know, if this is a fourth wave pullback, let me rephrase that. If we're chasing after the fourth wave right here, this is the fourth wave right here. So if we've completed our fifth wave over here, we'll then looking for price to come to our fourth wave. So it looks like we're going to be in a correction move, a deep correction move right here on the 1 hour. And if that's going to be the case, then I should be able to see price tracing off to this level right here. If that's going to be that, let's take a look at the profit on that. Profit on that is around 73 pips. Ooh, not a problem. I don't see a problem with a 20 pip grab on this. So what I'm going to do is I'm going to look for the market to drop back down south, at least 20 pips, grab our profits, get the heck out of Dodge. So I'm going to sell against the actual trend right now because I'm expecting a deeper correction move. So I'm going to go to the chart right here. And by the way, here you can see we've closed out all our positions. If I go to except for the Aussie CAD, we're actually still short on the Aussie CAD right here. But if I go to my terminal right here, here you can see that we did close out all our trades that we had. So we had all of these positions in here. US dollar CAD was the one that we held the most. Also held quite a bit on the CAD Swiss as well. That paid out as well. So you can see we did have some good payouts here. And we're out of our trade. Uh, so let's go ahead and take a look. And by the way, if I haven't mentioned it already, if you take a look in the description below, a lot of great stuff in the description below. In the description of a video, in our YouTube video, and by the way, if you subscribe to 2 videos or these channels. Just subscribe to the Traders Network Club as well as subscribe to the FxBigDog, because this show is going to move to only the Traders Network Club. All right, it's eventually going to move to only the Traders Network Club. So make sure that you go ahead and subscribe to the Traders Network Club, so that when we do that transition to the Traders Network Club, that you are watching this video and you're getting the updates. All right. So Traders Network Club, subscribe to that channel. We're going to be moving only to that, and we are really close to. I think we just started the YouTube channel. I think we're close to 1,000, or just slightly short of 1,000. But when we get to 1,000, we're going to start making 1,000 subscribers. We are going to start making decisions on only broadcasting on the Traders Network Club and not on the FxBigDog. FxBigDog is going to be used for other things. We're getting other shows, other things happening on the FxBigDog channel. So make sure you subscribe to Traders Network Club. All right. Now, what I was going to say is in the description below, you will also see a link there to a Telegram channel. And that Telegram channel is going to give you all the trades that we're doing here in this show. Every entry we enter, every time we close out a trade here in the show, these trades that we're placing here in the show, you will get access to those Telegram signals in the show right here. Okay? Just remember that if you can go ahead and check out the description below, you'll be able to get that link. All right. So let's take a look again at, we said we're going to go ahead and sell short on the New Zealand CAD right here. So I'm going to go ahead and enter. I'm using the Pip Grabber Trading Tool to enter the trade, and the Pip Grabber Trading Tool is going to manage my position. So there you can see, there's the entry point there. Using the Pip Grabber Trading Tool, it will enter me every 25 pips. I've set it like that. All right, in the settings, it's set up to go ahead and trade every 25 pips. And it's gone ahead and set my target down here. So I'm looking for that 25 pip grab, or at least that 20 pip grab, and I'm going to get the heck out of Dodge. Now, if the market does go higher, we will enter higher, and we'll go ahead and profit on the downside once we get into that 20 pip profit. All right, we're going to let that trade go, let it play out, do what it needs to do. Let's go ahead and take a look at some other setups. And I'm going to go back to US dollar CAD right here. And you know what? US dollar CAD has not pulled back yet. We're still at the set level right here. I'm still seeing that 15-minute divergence right about here. Market has still got that support going here at that 1618 right here. I'm going to go ahead and follow the trade Copier. I'm going to go ahead and trade this correction. So let's go ahead and take a look at the setup right here on US dollar CAD. And I'm going to go ahead and buy US dollar CAD right here. So I'm long right now in US dollar CAD. Remember I said I was going to put a pin in it. I wanted to see if it comes back down a little bit. It did. Got us into that at that support level again. And I'm going to be long on that. Now I want to just go ahead and put a disclaimer up there and say that if I'm wrong and price is going to go ahead and move further down south and chase after that fifth wave, then I do know this, that price is going to drop back down another 25 pips. I will get in again at the 1.27. All right? And all it has to do, price has to move up, just move back up to the original entry point, and we should be in the money again. And if that is, and this is what makes this such an interesting strategy, is because of this. This is now my fourth wave right here. So if the market completes the fifth wave right here, the target is going to be the fourth wave. Now, if I enter here and I enter here again, guess what? When price moves up towards that fourth wave, it's going to go past my first entry point. When it gets to my first entry point, I'm cashing out, I'm taking my 20 pips and getting the heck out of Dodge. That's how we make profit on this strategy. All right, let's go ahead and take a look over here. Now, we've got a lot of questions here. I haven't seen anything popping up here on my screen, but I've got a couple of traders saying, happy birthday, big dog. Well, I do appreciate it. Thank you, John. And we also got Kay right here. Kay, thank you very much for that as well. Appreciate that. We've got another one right here. Adrian says, happy birthday, Gary. Thank you very much. I do appreciate it. I do appreciate it. Thank you, everyone. Everyone with all the great wishes. Thank you very much. I do appreciate it. All right. There we go. All right. All right. And here we go. Yes, John. John says, yes, I was scared. It was a scary day with a major drawdown. Major drawdown. Listen here. Let's just define exactly what major drawdown means. If you're ever telling me, big dog, I got a major drawdown, that's a major problem for me. All right. Because nobody should have major drawdowns if you've worked out your equity management correct. All right. Remember that. Don't ever tell me you got a major drawdown, because all I'm going to do is say, well, that's your fault, my friend. Don't talk about major drawdowns, because that means you over leverage. Okay. So in some way, you're telling me that you've gone, and again, everyone's got their own sort of risk tolerance, right? And so your major drawdown might, in my opinion, be like, oh, well, I'm good with that, but you're not comfortable with that type of drawdown. So what happens then? You have to go and drop down your risk. So what I'm going to expect then, John, is that you're going to go ahead and make some adjustments to your risk management and reduce your lot size. Because if you don't like or not comfortable with that drawdown, then all you have to do is just go ahead and reduce your lot sizes. All right? That's the way you go ahead and control your emotions, so that if you ever get to that situation again, you're not in a scary moment. All right? We don't want to have that. All right? Everyone's got their own risk tolerance. There is a case, of course, we have to be straight up and honest about this. There is a case where it's not necessarily just a scary place because of your emotions, because of the level that you don't like to be in. But also there is a case of you are over leveraged. I mean, it is what it is. Sometimes you are over leveraged and you have to make adjustments. All right. So I do, just so that you know, I do keep an eye, and that's the beauty of the trade copier. I do keep an eye on everyone's equity levels. And the reason why I do that is because if I see that there's a trader that's connected to the trade copier that has very over leveraged lot sizes, or at least has over leveraged their trading by increasing their lot sizes, I do a courtesy call. I say, hey, listen, you guys, I'm just going to let you know. All right. I can't tell you how to trade. I can't tell you how to manage your position. I can't tell you. But what I'm going to tell you right now is if this was my trading account, I would not have it at that level because of these reasons. But you decide how you want to play it out. So that any time you go ahead and your account gets blown up because you've over leveraged your account, it's all on you. But I'm going to go ahead and say, hey, listen, I'm going to just give a sort of like, not a suggestion, but I'm going to go ahead and say, hey, this is how we managing our risk. And sometimes I do take some of my trading accounts that I do manage a little bit more aggressively, right? But then when I do manage my accounts aggressively, what I do is I have additional cash available. So if I go ahead and I trade a certain strategy or a certain account aggressive, I know that in most cases, that balance that I have in that account is probably about 40% of my total portfolio. And that I do have additional funds that is about 60% of the portfolio that is held in a very low risk strategy that I'm using for any margin required or needed in order to support the aggressive trading account that I'm trading. So you can be aggressive, but if you are aggressive, you must have additional cash to be able to fund it so you can follow through with the strategy. That's the one thing that traders fail to do is when they are losing, okay, they don't have additional capital to fund it, but also at the same time, if they do not follow through on the strategy, then you will not be successful. It is what it is. And I've seen too many times the traders go ahead and they start off with a strategy, but because they over leverage, they can't follow through on the strategy, and they end up taking losses because they can't continue because they've been over leveraged. And so what happens is I've had a client over the last few weeks, last few months, they were in some trades, over leveraged themselves, and ended up closing out their positions and took a loss only for the market to turn around and go in their favor. And if they had just gone ahead and managed the risk properly, or had additional funds to be able to fund it, or didn't get emotionally involved in her decisions, she would have actually been in that position and made money. So again, you have to know these things. And there's a lot of information that traders need to understand before making a decision how they're going to manage the risk. Make sure you understand why you're risking what you're risking and whether you have backup, and whether, if you don't have backup, go and risk low. Don't go ahead and start off with high risk, okay? And traders, I've been told a few times to make sure that everyone knows that this video is for educational purpose only. I'm not a CTA. I can't advise you in your trades. I cannot tell you what to do. You're just going to have to do what you need to do and do your own research. But this is certainly only for educational purposes only. All right, this is educational purpose only. So take it as is. All right, traders, let's get back to some trades right here. Again, I told you it's not Preachy Friday, but this is what happens when it's my birthday. You know, when you get older, you wanna go ahead and share some wisdom. Okay, so let's take a look and see right here. Hey, thank you, Carlo. Carlo says happy birthday right here. I do appreciate that. And check out these traders. 600 plus perps is major, but I was not over leveraged. All right, so the first thing that you're looking at is perps. Listen here, traders, do yourself a favor. Stop looking at your perp P&L, all right? Don't look at your perp P&L. We enter multiple positions. When you enter multiple positions, looking at per P&L is not the way to look at that. You got to look at your risk percentages. How much risk am I risking on this trade? If I have got 20 trades, if I've got 20 trades in and I'm down 5,000 pips, all right, I'm down 5,000 pips, but I'm only down in percentage value, I'm down, let's say 2%. That's not a big deal. All right, that's not a big deal. So look at your percentage, and that's how you can quit. That's how you can go ahead and make a decision whether you are over leveraged. Don't look at the pips, because remember, when you look at these pips, you're looking at a accumulation of entries. So if you got, let's say, 10 positions in, and each entry is down, or at least the first entry is down like 50 pips or 25, and you keep building it up, and the last entry is down, let's say, 500 pips, you must always look at what is my break-even point, because you'll find out that you're actually just overall down based on all your positions in. You're overall down maybe about 100 pips. And that was the scenario with the US dollar CAD. US dollar CAD, we came down total about 100 pips down in drawdown. It's not 600. That's taking each entry and adding each pip and saying my total pips, I'm down 600 pips. But you're not. Your break-even point is where you have to go ahead and take a look and see where your pips are. And if you're down 100 pips or 55 pips, that's within range. That's totally within range. We've been down around 200 pips already, total 200 pips already. Come back, made some profit, got out, readjusted ourselves. So look at your percentages to evaluate, or look where your break-even point is to where price is trading right now. And that will tell you how many pips you actually are down on. All right. All right, let's go ahead, and a lot of talking today, Gary. A lot of talking today. Yes, thank you very much. I did have a fantastic time, or at least I have a fantastic time coming up today. My wife has prepared something really great for my family, so we're going to have some good times today on my birthday. Thank you very much. I appreciate that. All right, let's take a look over here, and let's take a look over here at the setup. All right, so we're long on US dollar. Let's go to Aussie CAD. Now, Aussie CAD, we're currently short Aussie CAD. Here is the trade that we're in here on the Aussie CAD. And we are about, take a look right here. And this is a great example right here, okay? If you take each entry, we're in on 4 entry points right here. If you take each entry point here, and you say, okay, big dog, I'm down from where price is at. I'm down on the first entry, 80 pips. Down on the second entry point, 54. So that's already 134 pips. Then I'm down another 30 pips. All right? Hang on, is that 50? Yeah, 30 pips. So I'm down about, let's call it 164 pips, right? And then this one right here is at break even. So am I down 164 pips? Or am I, from my break even point, am I down, how many pips am I down on the break even point? You see the difference right here? If I added each individual trade, I'm down 164 pips. But is it truly down 164 pips? Or am I only down 36 pips? You see? You see how the perspective changes right now? Now you think to yourself, hold on a second, can I make 36 pips up? Can I make 30? Yeah, I can. So saying I'm down 164 pips puts you in panic stages. Oh my gosh, I'm down 164 pips. But really, at the end of the day, what we're really down is 35 pips right here. That's what it is. All right? That's what it is. Okay? All right. I think a lot of conversation. So we're going to continue to hold on the short on the Aussie CAD. I'm going to continue to hold short on the Aussie CAD right here. Let's go ahead and take a look and see. What about the Swiss? I'm seeing a bounce right here. Let's take a look at the CAD Swiss right here. Let's see. We've got a trade on the CAD Swiss. Now, I notice right here on the trade copier, we're short on the trade copier, and we went short on the trade copier at what price? At 72.18. 72.18. So we're already about 12, 11 pips in the profit on this trade. So it looks like I'm getting in on this a little late. Let me go ahead and clean up house a little here. All right, just do some housekeeping here. And I'm going to go to the 4 hour first. And the 4 hour, we've come off this big support down here. The market had a wave 1, 2, 3. We had a 4 pullback here at the wave 1. Market drop back down, it's gone rallied up. So this is actually just a correction move. All right, so I need to go down to the 1 hour. And I need to look at the swings going down here. So here we had a wave 1, 2, 3, 4, 5. So here we go. This is our internal structure, wave 5. Then we had a pullback. Market dropped down to the 1.618, so which means that this becomes my next swing. Okay, so here's my next swing right here. So traders, if this is my next swing, that is my previous low right here. That's the wave 1. This is where we should have been selling. What did the trade copier do when it got to that level? It sold at 72.18. Great job for the trade copier right here, but markets already moved 10 pips down. And so we're not, and to be honest with you, regardless of what the trade copier did, if I had to go ahead and look at this from a manual perspective, right, this would have been the ideal place to go ahead and trade. All right. So if you are using the Pip Grabber Trading Tool looking for resistance and support, where would you want to go ahead and sell? You would want to go ahead and sell right here at the top, and that would have given us actually a better entry point at 72.40. So 72.40 would have been a solid level to go ahead and look to sell, and price moved down 20 pips already, more than that. So right now, I'm going to say that I'm on the sideline. All right. I'm seeing that the overall directional bias is bearish, and then we are moving down. But in order for me to want to get in on this, because I see the overall direction is bearish, and we're probably chasing after a level down here about 71.40, I would want to get in on a pullback and then sell it back down south. So if you got the Pip Grabber Trading Tool, then you can go ahead and look for that pullback, sell the pullback, and trade it back down south. Me, I'm going to enjoy my time with my family today, so I'm not going to be in this trade. But good luck with you guys. Okay? Let's go take a look at the next one. Euro US dollar. Euro US dollar right here. All right, good. Now we are talking about dollar weakness, so we're going to continue to follow dollar weakness. But is this market in a correction move on a shorter time frame? Let's take a look and see. So here it is on the larger. This is the 4 hour right here. We see this is the wave 1, wave 2, wave 3 down here. We're seeing a pullback going up right here. Nice little pullback. If I go ahead and take a look at the upside targets, let's see here. I'm going to kill that trend line. Also do some housekeeping here. Okay, so the same thing would apply right here. You see, we're in a little bit of range right here. The market's ranging at the moment right now. Let's do this again. So the market has got this range that we're in. And let me just pull that. I'm going to pull it further down here. And so we're at the top of the range here. And so we're looking for a pullback. Let's see how far it is. Yeah, there's pips down there, about 46 pips. Let me go down to a 15-minute time frame. Or actually, I want to do the 1 hour here. All right, we took out that low, so clearly we are in range. Delete that. This is what the 1 hour. Okay, so we're stuck here at resistance, and we are anticipating price to move up to about 115.03 here. So we do have some upside potential on this. And if I look at this last swing rally, and look over here, we did go ahead and hit the 1.618 right here. So we're in a pullback, and this goes to the same thing. This is the same thing as we had. What did we do on the US dollar CAD? Let's take a look here. So US dollar CAD right here, we went ahead and bought US dollar CAD, expecting some stronger US, right? And so because we bought on that, I'm going to go back to, let's go back to this. So this is a pullback in this retracement. Now there's two things here. The euro is set up a little differently than the US dollar CAD. And the reason why I'm saying that is because we have a solid resistance up here at the top. We are range bound. So even if I buy on this pullback right here, it's not to say that we are actually going to go ahead and break through this. We could stay in this consolidation and price could come back down to the support down here again. Okay. So when I look at this right here, I'm thinking that maybe, just maybe, we should be selling this at the moment right now. But now the market's already moved down off that high. So what I'm going to do here is let's take a look at the room we have. Okay, good. We have 20 pips before the high. And let's see down here, we've got about 37 pips going south. All right, I'm going to do this. I'm going to go ahead and do the opposite of what we did on the US dollar CAD. US dollar CAD, we're banking on a stronger dollar, just in the short term. I'm going to go ahead and say that we are seeing this pullback, and I'm going to go ahead and want to buy long. Now, let's take a look at the news. We had two news reports coming out, or at least three rate decisions coming out this week. Dollar has, the Feds decided yesterday that they're going to go ahead and keep the rates unchanged. That was yesterday's at 2 p.m. That created weakness out of the dollar, and we know that because if they start doing something aggressively right now to help fight inflation, then it's just going to get worse and worse and worse. So clearly, the Feds aren't doing a great job. Now, we've got here in the UK, we had a rate decision here in the UK. They went ahead and what? They raised their rates 25 basis point. All right, so they went from 0.10 to 25 basis point. They've raised their rates to 0.25 from 0.1. So they've gone ahead and raised their rates, and the Eurozone never followed suit. Eurozone decided, no, they're going to keep their rates unchanged. So already the UK is starting to, and they're getting aggressive. They know that there's a problem. There's inflationary problems. And the only way to do that is to start raising rates. Now, they've got to control, they've got to sort out everything else around, like jobs, housing, all the other good stuff. Look, housing is housing booming in certain states here in the US, but the job market is certainly an issue. They need to resolve the job market. They need to resolve a lot of things that are obviously here in the US. We've got a big problem, and that's printing money. They've got to resolve that issue too. One issue would be stop printing money, and that'll help also with the inflation. But there's a lot of things they need to do in order to get inflation in control. Now, so they've gone ahead and raised the pound. The UK has raised their rates. The Eurozone, they did not. Now, could that be a negative or positive reaction to the market? Well, at the moment right now, we're seeing that it was a positive reaction, and now we're seeing a correction. I'm going to go ahead and buy it because from a technical perspective, I think Euro, US dollar should continue to be bullish. Okay? So I'm going to go ahead and buy that pullback, and I know that there might be additional trades, but I'm going to go ahead and buy it. All right. Now, the reason why I'm buying on this is because if this reaction we're just seeing right now is just a dip right here and then a rally again, I'm going to go ahead and play that rally. So I'm about 20 pips away from that resistance. That's the reason why I was okay on that. I'm about 20 pips away from that resistance from the previous, actually 22 pips. So if the market goes back up and retests those highs, which it may do, we're going to be making money. If the market drops back down 25 pips, I'm going to get in on a second entry point, and I'm going to go ahead and look to take profit at my break even, or at least my first entry point. So I'm going to be comfortable with that. So I'm currently right now long. I'm doing now almost a counter trade against my US dollar CAD position that I have, and I'm going to go ahead and buy long on this. Okay. Now the trade copy, just so that you know, traders, the trade copy is currently selling right now. So the trade copy says it could move down further down south to pick up a 20-foot profit. I'm going to say that if it does go down, we'll pick up a second one on this manual trade and make a profit on the upside. Okay. All right. Now, let's take a look right here. Cameron has not looked at the screen, and my screen has gone blank on me. Let's go ahead and take a look here. All right, let me adjust my camera back up again. All right, we're good to go. All right, now traders, this is the deal. We are going to look at what else we have not traded today. So we're in on the US dollar CAD. We're long on US dollar CAD. We are short on Aussie CAD. We're short on New Zealand CAD. We are long on the Euro US dollar right here. The only trade that we haven't entered is the CAD Swiss. And I did say I'm going to go ahead and stand on the sideline on that. All right, so that pretty much wraps up our session today. Traders, I want to go ahead and thank everyone for being here. Thanks for all your support as well. Really appreciate everyone being part of the Pip Grabber Trading Show. Hopefully you guys had fun like I've had. A lot of information being shared over today. Hopefully you guys picked up a lot from that as well. There is a lot of conversation we can have about trade opportunities. We've only got limited time. Today I took a little extra time just because it's my birthday. I want to give you guys a little extra special session today and talk a little bit more about the actual strategy as well, because as we start growing and a lot more traders are starting to connect to the trade copier, I think it's important that I use these sessions to be able to make them feel comfortable about what we're doing. And so again, the reason why we have these sessions is not only to get traders into the show, but also to educate them of exactly what's going on in the trade copy, so you're in the know all the time. And there's nothing you guys need to be concerned about unless, of course, you're over leveraged. That is the only concern. Now, granted, past results are not indicative of future results. So I'm not going to advocate that we are up 130% or 133% for the year. Fantastic. We're up almost 17,500 pips for the year. We're doing absolutely awesome. But there's a lot of things that can happen in the future that could change those results, and we may not get those results in the future. But at the moment right now, while the going's good, let's go ahead and make sure that we take advantage of that. So with that being said, traders, have a fantastic week of trading, and I'll see everyone back again next week as we go ahead and continue the Pip Grabber Trading Show. This is FxBigDog signing off.